Hello, everyone. It's good to be recording again. I took a bit of a hiatus for the past few months just because in the market, even though everything was going really well, I was also a little bit nervous just because everything was going pretty well. The market just kept going up and up. And I also didn't want to push my luck just because it felt a little bit like a bubble. So for the past few months, as you can see here, I didn't really do any trading or not so much. I mean, you could see that the gains kind of slowed down towards the last few months, starting in August, and that's when I cashed out quite a bit of it and just kind of stayed away from the market. And that's because everything's just been really expensive. As you can see recently, companies like Nike, companies like uh, Netflix, companies like Amazon, Apple, Palantir, everything's just gone up quite a bit. That's been in conjunction with the crypto world as well. Bitcoin's gone up to over 100,000. I haven't really been watching Ethereum. I know one of my friends is into XRP, and he showed me that it went up quite a bit, like I think over 2x. So that's gone up quite significantly as well. So it's a really frothy environment. And for that reason, it's a little nervous and I kind of stayed away from it, um, especially because it's not necessarily that companies are commanding that value with their earnings per share. It's because they're kind of generating it due to high valuations or like being a little bit expensive as opposed to like warranting that price. There could be an argument for like let's say Amazon. Of course, it's good, really strong earnings. Uh, Same thing bit for Apple. Apple's a little bit extended, but for example, like Palantir, that's just that's just a really high PE, and it would make sense to me that there would be some kind of corrections soon. And so we look at the market overall. So let's say I go to SPY, actually, I already have it right here. This is one thing that scared me. As you can see, once it loads, if we look over the next 5 years, or the past 5 years, you can see that since October of 2022, everything that was our last correction, or pretty big correction, I would say. It went from 460-ish to like 360, quite a big dip in terms of percentage. And since October 2022, it's just been continually upward. I remember in October 2024, when I was thinking, or I read the headline that pretty much for a year straight, it had been going up continually. And I had seen on the YouTube platform there's a number of people who were kind of saying that this hasn't happened since I think it was like 1989, and it was a really strong bull rally. And that can happen. So things are statistical. There's probabilities to everything, but at the same time, uh, there's always also regression to the mean, which is things going back to what it's fair, what should be its price. You can see that a little bit in the car market, for example, during COVID and when the supply was really low and the supply chain was affected. Yeah, prices for vehicles were ridiculously outrageous. You could get certain vehicles, or you had to put like $10,000 or 10,000 plus dollars as part of like I forgot what it was called, like a dealer fee, or essentially it was just way overpriced cars. But now that the supply is back, you can see that things have regressed. Cars are kind of, I wouldn't say they're normally priced because everything's gone up since the post-pandemic, but they've gone down quite significantly from their peaks. So, but as you can see, it's just been going up, and we've only recently had a bit of a dip this past early December, I would say. It's not even too much of a pullback or a correction, I would say, yet, because it hit 600 and then just dropped back. It's kind of playing with that 600 number, and in the market, it's right now like at 580, so $20 out of 600, that's almost nothing percentage wise. So usually I would call correction if it's been like 10%. So if it goes to like 540, okay, then that should be a relief, and then that would help bring down some of the valuations back to normal price. And that's really what I've been looking for. There are some stocks, however, that are at least what I think is pretty good price. Not financial advice, of course, but a lot of dividend stocks have been kind of coming back down. For example, Nike's went from $100 stock the past year, and even more so I think the year before that, I think it was like as high as 170. Let's take a look at it. yeah, 170 in 2021. Well, this was during peak pandemic when things got crazy. There was lots of extra money being kind of available in circulation, and for that reason, stocks kind of went up, all of them. But apart from that, it was kind of sound at around $100, 120 or so. And then since then, right now, it's at around $70, and that's just due to their forecasts of earnings not going probably as well this next year. But this is a pretty good company in my opinion because it has a dividend. They're pretty iconic in terms of a brand. And there's a lot of other companies like that as well. Another one that I was looking at was Hershey's. Very interested in Hershey's just because it's pretty low price. I think it's at a 52-week low. Also has a dividend of around, I think it was like 3%. And so it's a good, in my opinion, for myself, it's a good buy. And so you can see right here, yeah, it's 52-week low is 156, and I believe that was on Friday. And its high was 211, and I think that was on the news that it was going to be acquired by, I forget what other company was looking for an acquisition, and that kind of made it skyrocket one day. And I think we could see it within the past few months. Yeah, you can see that skyrocket when there was potential acquisition, and then after it fell back down. But this is another case where another dividend stock, as well as Verizon, that's down, I think, another 52-week low. So lots of dividend stocks. If that's something that you're into, I myself, I don't get too much really into dividend, but if that's something that you're into, just know that they can be, there's potentially sales right now that you can look into in terms of purchasing stock. For myself, I wanted to look for something that's a little bit more volatile, still had that value, or still had a good valuation, of course. It's undervalued in my opinion, and is looking for good earnings in the near future. I'm talking about like the next upcoming quarter or the following quarter after that. So as long as it's pretty strong company, it's just undervalued for whatever reason. And some of them that look pretty good, uh, not necessarily. One thing I played with on Friday for like brief moment was AMD. The reason being is that AMD has quite the volatility if you've been in it. Unfortunately, for the past for the past year, I've heard it, or yeah, for the past year, I've heard it called advanced money destroyer. I think I saw in a YouTube comment, and that's because it's went from 200 plus right to down to right now 115. So if you've been in that, unfortunately, I do apologize. That's a bit of the market, but at the same time, I do think that AMD is it's a chip company. It's going to be well valued within the next few years as long as its earnings continue to grow. And you can take a look at its EPS. Yeah, so it's priced to have kind of better earnings over the next quarter. I haven't been watching its kind of guidance for the next year, a few years or so. But one YouTuber that I tend to watch as well is Financial Education. I forget his last name, but I know his name is Jeremy. Don't want to ruin the calling his last name kind of. So I don't want to butcher it essentially. But Jeremy was talking about AMD, and I think he is pretty spot on with his pick. So this is something else that I've been considering, and I did play with it a little bit on Friday just because I think it was Thursday or Friday. Just because it's gone down so much, and it's you could sell some covered calls on it for pretty expensive, that are pretty expensive. So for right now, I believe it's for a weekly covered call, it's $3 out of 115. That's quite significant. So let's do 3 out of 115. That's 2.6% you could get back in a week. If if you're like me and you play on margin, that's twice the amount. So that's 5% roughly in a week. You can increase your money, which is quite significant. But at the same time, like I said, the risk is inherent in its downtrend right now. So if you don't mind playing with falling knife, then that's something you can do as well. Yeah, it looks like another good buy. The one that I'm looking at myself is going to be Etsy. The reason why I'm looking at Etsy is just that it's not technically as volatile in terms of covered calls for Etsy relative to AMD. So that's a little bit of the downside. Right now, Etsy is roughly $1 of premium for every $53 share price. So that's a little under 2%. So let's call it 2%. If I margin it, that's around, let's call it 3.5%. Let's just call it 3.5% of your money in a week. As you can see, I did buy some shares of it. So I have about 1,700 shares. My cost basis is 52.50 on Friday, and I sold covered calls on them. Collectively, the covered calls work out to essentially $100 in premium if you can see it right here, 15 covered calls for $52 calls and 2 covered calls for $53 calls. There's a reason why that happened on Friday, but I won't get into too much details about it. But just know that essentially these average out to about $100 profit if Etsy stays at about $52 or more. So that's about $1,700 for the week on Friday. So I'm hoping that Etsy stays at $52 or above. Right now it's at $52.80, and it's also been in a downtrend. So I'll kind of go over a little bit of why I think Etsy is pretty exciting, at least for me. I think for me, it's an undervalued company. If we take a look at it, it's had horrible luck. I mean, once again, going back to November 2021, this was the time that all the stocks were very frothy. All that money was in circulation, and Etsy was up to $300. A lot of hopium, I guess. Since then, it crashed, right? So $80 and so forth. Right now, it's actually there was a point last year where I was trading it. Had gotten as down as like $48. Let's look at the past year. Yep, had gotten down to. I don't think this was when I was trading it. I think I was trading it back in August. It was at $50-ish. Yeah, $50. That's when I last traded it. But since then, it's back to its $50-ish range. And what's exciting about it is that you could see the EPS. So right now, the latest earnings was around 50 cents. But more recently, the next predicted quarter is to be about double that. So that's really, really exciting. If that was the case, right now its PE is what? Its PE is 26. So if it were to increase its earnings by twice the amount, let's call it a PE of 13, which is insane for a tech company. So that's really good. And I think it's something that can go up really highly. That said, for myself, I'm a little bit, especially since I like to play on margin, I'm a little bit too wary of just kind of buying and holding, especially since I have 1,700 shares. That means that for every dollar movement, that's $1,700. So if it goes up a dollar, that's great. I made $1,700 and I could sell out. If it goes down a dollar, then that's $1,700 lost. Whereas I can mitigate my risk by selling that covered call. And so if it goes up, I make the dollar premium, which is $1,700. If it stays the same, I still make the dollar, which is $1,700. And if it goes down a dollar, then it just eats up my premium and I lost no money, right? So I think that's kind of the best of both worlds. Best situation where I can kind of mitigate risk, especially in this environment right now where things are slightly correcting. I don't want to call it a full correction, but I think it's a really good place to be. So that's what I'm doing right now. Kind of thinking about buying and just kind of holding until the next quarter. That's going to be in February 19th, so a little bit more than a month from now. If I were to hold it and it were to go up, like let's say a few dollars, maybe like $5 or so, that'd be roughly 10 grand, or let's call it 8 grand. Yeah, 8-9 grand that I would appreciate. So that's something that I may do. I usually don't like to play earnings because if there's disappointment, then there could be a huge overreaction and I could be down 8 or 9 grand. I'm still debating that, but for now, I'll be playing the weeklies for at least this next week and potentially the week after. And then once it gets closer, then I'll go ahead and consider maybe holding it through earnings. But that's what I've been doing right now. Love to hear about what you're doing, what your position is. Are you kind of staying away from the market? Are you in the market? Maybe you're playing index funds and just kind of tracking SPY, VOO, and all these things. Maybe that's the case, and that works too, because as we know, things always go. Things are always poised to go up over the next, few years, tens of years, 20s of years, hundreds of years. At least since the stock market's been created, is generally trended upwards. So if you're playing indexes, that works. If you're picking particular stocks, I'd be interested to hear what exactly it is you're picking. And I'll try to provide more regular updates now that I got back into trading, the kind of what it is that I'm doing and I'll also try to post some kind of fun educational videos, a little bit about stocks I don't know. I'm not a financial expert. These are just things that I picked up while kind of playing around with stocks and kind of having fun with it. So if you enjoy it, please give a like, share, subscribe, and I hope to see you soon. Thank you so much for watching.